Morning, Steve here in Chicago with the morning grain comments. We have bean and corn prices about unchanged, while wheat's taking back some of the recent gains, down 7 cents in Chicago and 10 cents in Kansas City. I think the market might be focusing on some of the reports coming out of the annual Kansas wheat tour. The tour started out across the central and northern areas of Kansas and came back with a yield lower than last year's yield, but near average. And I think the market took that as a sign that maybe this weekend's cold temperatures and snowy weather will not damage the crop as much as feared. Today, I think they'll be looking at the crop conditions that are in the western areas where the crops were hit the hardest by the weekend weather, and we'll see if there's any updates on abandoned acres or if lower yields than a year ago. Those areas last year had some record yields. We also note that open interest yesterday about unchanged in the beans, a little bit higher in the corn but lower in the wheat. So it looks like funds yesterday were sellers of beans and corn, and they were covering their shorts in the wheat. So in the beans and corn, they may be looking ahead and saying, okay, the weather has been wet, but conditions may improve down the road, suggesting that at least soybeans and corn prices are too high, giving that long-range forecast. As far as the weather is concerned, it looks like there's going to be colder than normal temperatures Sunday and Monday across the eastern Midwest. So we'll have to watch the areas of southern Illinois, Indiana, and maybe Kentucky for the wheat there, because it's past the growing stage that it could be hurt by cold temperatures. There was flooding overnight in parts of Missouri, Illinois, and Indiana, and there's more rain today. So we'll have to watch and see how the crops fare out in that area. It looks like the extended outlook is drier across parts of the plains up into the Canada area, which allows spring wheat and spring crops to be planted in the northwest part of the Corn Belt and Canada. And the 11 to 15-day maps are mixed. One says it's going to be dry and the other one says it's going to be wet. So it's like rolling the dice sometimes when we try to look 2 weeks out in the forecast. There is some stoppers in the beans, in the corn, and especially in the wheat. So we'll see if that has any impact on spreads and try to figure out why the commercials are stopping those commodities. Again, bottom line, there's too much beans in the world for us to rally much over that 980 area in the July beans. There's too much corn in the world for us to rally over 380 unless there's a weather problem. And the market found pretty strong resistance at the 465 area in the July wheat, and probably can't push over that unless there's some global wheat supply problems. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.